Welcome to Markets Now. I'm Michelle Rook with Chip Nellinger, Blue Reef Agri-Marketing. A mostly lower day in the grains with a higher day in livestock futures. And Chip, I want to start off with the soybean market. Soybean meal making new contract highs on Friday, but setting back here today along with soybeans. How much of this was just some profit taking?
Yeah, I think it's entirely profit taking. We didn't have much in the way of bullish news. We didn't have any fresh export sales announcements this morning, and it's the end of the month coming here very quickly. And so the funds, I think, just took a quiet day to take a little money off the table, not only in their long meal positions. We had some unwinding of some different spreads between Kansas City wheat, Chicago wheat. We saw the oil meal spread unwind a little bit. And so I think largely it was kind of a fun positioning day here with only one day to go ahead of end of the month.
What about that meal market, though? Like I said, new contract highs. Do we get the first of the month into the first of the month and then go back and start retesting that high because export sales have been really stellar there?
Yeah, they've been really good. Probably of anything going right now, that's maybe where the export story is. Obviously, that's a result of this multi-year drought in Argentina and the fact that they really have nothing to export as far as soy products go. And so there is a real demand story in soy meal. And I think eventually, too, this isn't talked about much either. That's going to spill over and help support corn eventually, too. So we were overbought and overdone technically. The meal market kind of needs a little bit of a break. It's getting that. This might be healthy longer term. We'll see if the funds step in and want to re-own this the first part of November. If so, I think that bodes well for continuing demand there for a rally in beans. And eventually, like I said, it's going to spill over and help support corn as well.
But you've got a meal-led rally, and you can't get the market to get out of these trading ranges that we're in soybeans. And so what's it going to take?
Yeah, again, I think it's going to take getting harvest totally wrapped up here, which we're getting closer and closer on beans. But there have been some late weather delays here. There's been a slow start up north, particularly in Wisconsin. And so if we can get harvest behind this and get into mid-November, I think then the South American weather situation starts making more importance to the market. It's not good down there right now, but there's plenty of time for them to fix it. But if you get into mid to late November and you're still talking about too hot and dry in the northern two-thirds of Brazil, too wet in the southern third of Brazil, that's going to become a real issue. And there's in my opinion, zero weather premium in bean prices or the corn market right now for that matter.
All right. So you don't think we're trading South American weather yet? It seems a little early for that.
It is early. I think the market's been burned a few times in the last few years with trying to trade weather, whether that's the northern hemisphere or the southern hemisphere, trade weather too early. So I think they're going to wait, take a measured approach. I think there's very little weather premium in bean prices right now. But if you get 2 to 3 weeks down the road, again, that becomes to where it's much more important. And maybe the one market that maybe needs to pay attention is the corn market, because as you get this wet weather in the southern third of Brazil, if you extend that much into mid-November, you're going to really mess up the second crop corn planting window in Brazil. And that's, really a situation that could really affect yield and logistics very, very much. So I think it matters as much for the corn market as it does beans going forward into the mid to end part of November.
Did the corn market also get drugged down by not only lower soybeans, but you had lower SRW wheat and lower crude oil?
Yeah, I think the crude oil market again is really kind of weak here, especially in light of some of the stuff going on in the Middle East. Now I know it hasn't escalated dramatically like the worst fears were, so we're maybe extracting a little bit of that risk premium out of this Middle East conflict. But crude oil down nearly $3 today. That's something that I think weighed on the grains, especially commodities in general. But again, I think that could have been more into the month positioning. And getting ready for the turn of the calendar to November than really anything, fundamentally in that energy market.
And here again, corn market is still stuck in a sideways trading range, isn't it?
It's stuck in a sideways trading range. I was thinking about that this morning before the markets open. It's been very frustrating. Whether you're a bull or a bear, you're just it's chopping everybody up, right? And it's getting people impatient, myself included. But I do think that's something that we need. We need to base this thing. We need to go sideways. We're doing that. It's still right on time. And I really think if we can get harvest really wrapped up and kind of think about southern hemisphere production, demand, the turn of the calendar to the new year and getting into winter, I think that's something that could maybe put that ultimate low in and maybe put a little bit of a rally in going into year end.
Yeah. Well, and it's like I mentioned, the corn market doesn't get any help from the wheat market. And what about the wheat market? Kansas City wheat hitting new 2-year lows again here today. Is the problem with that market that we don't have a bullish story? Or, is there one bearish thing we can even point to at this point?
There's really not one bearish thing. I think we're still under the influence of too much supply in the world market. Now, I think things have tightened up a little bit. I think one maybe silver lining is the fact that the Chicago wheat market has not put a new low in, whereas the Kansas City did. I think that's a good sign because that's where the biggest fund position is. They're massive shorts, near 100,000 contracts in Chicago. And again, I think today was as much into the month shenanigans. You saw some spread unwinding where the Kansas City market was strong relative to Chicago, and I think that's just spread unwinding and positioning for the end of the month.
But like I said, we don't have a bullish catalyst to get these funds out of their big short position, do we?
We don't, and they've made a lot of money being short. They seem like they sell every rally, and as they have over the last year, they've made a lot of money doing that. But I do think the silver lining, like I mentioned, we're not making new lows in the Chicago market, and so it wouldn't take much at the start of the new month here if we could get a little bullish catalyst. Now, this may be dreaming on my part, but if you can get up and maybe get above the highs from last week in the wheat market, that could be the final straw that broke the camel's back as far as the big short position in Chicago wheat. If there's bearish news, however, and they push it into new lows, momentum begets momentum. So they're going to continue to add to that. But I think the key is we're holding above the contract lows here, or the recent lows in Chicago. If we continue to do that, the fund position, I think, is slowly ticking as far as them getting out of their shorts.
Okay, speaking of funds have liquidated quite a bit of their long length in the cattle market. It was not a good week last week to start, but we actually didn't have a bad close on Friday. We've kind of started to fill those chart gap areas here now today. Will we fill the chart gaps and go back up, or what's it going to take to get us there?
Yeah, I think that depends on the cash market, right? And that kind of shows you that the funds early last week, as they were in mass liquidation mode, it kind of drug us too far fundamentally to the downside. The cash market held together pretty well, and we snapped the futures right back as soon as the funds were done selling. So, I think we got to get tomorrow out of the way, get the first 3 or 4 trading sessions in November going, and we'll find out quickly, are the funds going to continue to liquidate their long position? If so, that probably doesn't bode well, at least for some further downside. But if they're done, if they have the position size they want and the cash market stays firm, I think we will eventually fill that gap and maybe rally, maybe not into new highs, but closer to contract highs than where we're at today. But I think it's entirely about the funds and their positioning the next 4 or 5 trading sessions.
No doubt. And in the hogs, the funds have gone short. We've been up for 4 days in a row here. So can we keep that going, that momentum?
Well, again, much like the cattle market, I think that depends on the cash and the cutout, right? The funds have been whipsawed a little bit in the hog market. So, they haven't had a great track record in hogs here recently. And so if the futures can hold together up here, it may drive them to get back out of their shorts. Now, it might not trigger them into, massive longs, but that could be enough to give us a little bit of a rally. But it's entirely cash market cutout related, and we need to see that hold and maybe gain on it into November, some of the recent gains that we've seen to end October.
And one thing that could impact all of the markets, both the commodities sector and the outside markets, is the results of the FOMC meeting this week. What do you think they're going to do?
Well, I think they're going to probably hold tight, unchanged, but kind of give some tough talk. That's just kind of the trend is your friend type. And they've said for a year and a half, we're going to keep interest rates higher for longer. So I don't think they even need at this point to raise them much. The market's doing the job of the Fed and continues to push rates higher, irregardless of what the Fed says. So I think they stay unchanged. What's the reaction in the financial markets is the next question, and that could be one of a million different things. End of the month here, the dollar looks like it's tired a little bit and maybe correcting to the downside. Saw a little rally in the stock market today. Interest rates are pretty quiet ahead of this this meeting. So you could have a big move here one way or the other, depending on what they say. But my guess is unchanged, with some tough talk that we're going to keep it higher for longer. But the reaction is really something I don't think anybody can predict right now.
All right, we'll see what they do. Thanks for joining us, Chip Nellinger, Blue Reef Agri-Marketing, and that is Markets Now.